Silver trading has been around for a long time. It has a very volatile history as a market. If you go back to the 1970s, there was an era when two US brothers tried to corner the entire market in silver, causing the price to rally massively and then indeed drop overnight right at the end of the 70s and the 80s. So silver's volatile reputation persists to this day, and indeed we've seen that borne out recently in the market, where both gold and silver have dropped back sharply from highs that they've been holding up around for quite some time. The thing to bear in mind with silver is, yes, it is a precious metal, and it is used in the precious metal industry, but it's far more abundant than gold, around 19 times more abundant in the Earth's crust than gold. And so you also have industrial use for silver. In the electronics industry, you see a lot of use of silver in place of gold. So that means it's not just a precious metal play, it's not just a way of sort of hedging against inflation in paper currencies. It's also important to look at the industrial uses of silver and how that plays out. I think it's almost certainly true today that the definite adherence for silver. As with any market, there are people who will stop viewing it just as a rational investment, but as a key hedge against deflation or indeed inflation in terms of currency printing from central banks. Talk of manipulation from big investment banks as well does tend to abound in the silver market. And it's very hard to prove, of course, but then the nature of silver bugs and indeed gold bugs is that they will take this view and fly in the face of all other evidence to the contrary. So it's I'd be very cautious in saying that you should view it entirely as protection against paper currencies, but look at it like any other investment, approach it rationally and sensibly. They do tend to move in tandem. Usually if you have a sharp move in one, you'll have a sharp move in the other. The general direction tends to hold true for both of them, despite the fact that silver has its uses aside from just a precious metal. But with silver, you tend to see sharper moves. The market is more thinly traded than gold in the actual underlying trading in the futures and physical market. So when gold moves, say 1 or 2%, silver can often move 3 or 4%. So it is always has a reputation and somewhat justified as being gold's more exciting cousin. But that brings its own pitfalls in terms of volatile movements and sharp movements in a direction you're not anticipating. They do often find new sources of silver. Plenty of miners around the globe dedicated to seeking out new areas. There is a degree of reclamation in industrial uses for silver, so around half of it can be reclaimed back from uses in industry. So it's not a question of silver as being, there's a finite amount of silver that's being reduced on a regular basis, but rather obviously some use of it will be lost in industry, but some can still be recovered. We've had over the last week or so very sharp drops in the price of silver. It's come back towards the $24 an ounce area. In fact, a few sessions ago we had a 10% drop in the price of silver in one day, and it's quite a long time since we've seen that. I think 2011 was the last time we saw that bigger move in silver, and it really does underline, I think, the volatility you get in precious metals. A lot of speculative money has flowed into silver over the last few years. People looking to protect themselves against inflation, and they've stopped looking at it sensibly, and they've just sort of ridden the trend higher. But suddenly, as that has turned lower, we've seen a lot of that money come back out of the market, and so the drops have been impressive, to say the least. IG offers directly, you can trade the price of silver, both using short-term daily funded bets and also longer-term forward contracts that will allow you just to ride out the longer-term moves in silver. But as with gold as well, you have a number of mining stocks that you can use to play the price of silver. And Fresnillo, the Mexican silver miner, is one of the biggest ones listed in London. Obviously, as the price of silver has dropped sharply, the price of these miners, in their share price, has dropped as well. Investors expecting that a lower silver price means that there are reduced profits. And also miners are suffering at the moment that the cost of extraction of raw materials has increased, means their margins are being hit. So profits all around not looking good for miners. There are also companies listed in the US and in other exchanges that you can trade silver price, Silver Wheaton being one of those as well. I think yes, if you're not quite as comfortable with the moves in silver as you might be in other markets, then a guaranteed stock would make more sense in silver, given the volatility we've seen. And it's not unusual to see that kind of volatility over a sustained period for silver. Moves in one direction can last for quite an extended period and be quite sharp moves. So a guaranteed stop, I think, does make a lot of sense in terms of silver. Trading times for silver are the same as for other commodities. So they open around 1 in the morning and they close about 11 p.m. at night. There's a 2-hour gap to allow for adjustment of positions, and also as markets around the world move from one trading day to another. So the Asian handover just allows for sort of admin work to be done on positions in the futures market themselves.